Good morning. Welcome to Bazaar Morning Call. It's a very big morning for us at CNBC TV 18. You're going to be seeing constantly running on our channel the India Business Leader Award dignitaries who will be gracing the occasion. The cream of India Inc. and the cream of policymakers are going to be present with us this evening. So do stay with us throughout the day and throughout the evening to participate in this glittering function from wherever you are, from the comfort of your own homes. Morning, both of you. I was going to say that there is some green on the screen. So are the choppy, ranged markets going to break in the green? But just about last half an hour, the markets have turned into the red in Asia. And that's after the Singapore trade numbers. The export numbers have come in at minus 8.5. So that's just a repeat of the Chinese numbers, which were also a contraction in December. So let's see. At the moment, the mood has turned a little red from green. So where will we break out in the range? I don't know. My own sense is we may be ranged till the numbers come. Reliance and Hindustan Unilever, they may hold a lot of secrets of the market. And just a last word of positivity. Yesterday, the Reserve Bank announced some liberalization of FX rules. Excellent. I mean, genuinely cleaning out all the exceptions and small buckets and all that, and making it easier to understand the rules that govern FX loans. I mean, that's not anything to do with today's market, but a good positive development.
Okay, Lata, hi, morning. Anuj, morning. Also in developed markets, there was some good tidings, right?
Absolutely.
I mean, the Dow was up quite a bit. Both Goldman Sachs and Bank of America Merrill Lynch posted really good numbers. In fact, for Goldman Sachs, the stock was up 10%. It was the biggest one-day gain since 2009. And Bank of America reported record quarterly profits. Always a good thing to hear about positive quarterly earnings there. In our own markets, DIIs bought about 304 crores in the cash markets. And now put together, they've pumped in almost 2,600 crores in the month of January. So good money coming in from the domestic fraternity. But the question still remains, this 10,900, 10,950 resistance, can it be taken out anytime soon, or will we sort of hover around these levels? Anuj, morning. You were telling us how it would be, a bit foolish to chase the rally after the big move that took place in the previous session. Yesterday, we saw it play out. I mean, nothing much happened in the market. Do you get a sense that even today, the market could hit a bit of a resistance at this zone?
Yeah, morning, Sonia. A lot of people spend too much time predicting market instead of just following market. I think the basic thing is, and the cues come. You respect the market, message. Say buy at 10,500, sell somewhere around 11,000, and somewhere later you'll find the cues are there for you. Anyway, I just want to point out this, the texture of the market is very interesting. There's a bit of a dichotomy happening right now. When the year started, we were getting a sense that perhaps move from IT and exporters will move to domestic stocks. Look at what has happened actually. The Nifty this week is 0.9%, this month is 0.26%. The Bank Nifty has done nothing this week, 0.1%, and it's up 1.2% for the month. The last year's biggest gainer, IT index, is once again actually the one which is leading the market. 3% gain for IT index this month, almost 2% this month. Large part of that, of course, is because of Infosys, which is something we have mentioned time and again. But the broader market is seeing a bit of a decline. Nifty mid-cap and Nifty junior. And junior more particularly because that is where the good quality stocks are also there. That is actually down 1.6%. Just keep an eye on that. Yesterday, Infosys and Reliance contributed 15 points to Nifty. How much was Nifty? Up 3 points. Day before, we all know how 40% gains were contributed by Infosys and Reliance. So the market's become quite narrow. Advanced decline is not great. And it's 10th time that we have faced resistance at 10,900 to 11,000. Issue here is that the market is not weak at index level because large stocks are doing well. The market perhaps is set for a breakout, but I would still maintain it's not worth chasing it because, you don't want to, buy a 30-40 point gap up and then see the market decline once again. The big trade still is to buy the dips and the plunges. They will come. For whatever reason, dips, plunges would happen. You have to buy them.
Okay, today there's the Bank Nifty expiry as well, F&O expiry. You were saying that the Bank Nifty has done nothing this month, but over the last many months, it's made higher tops and higher bottoms. Yes. So does it make sense to still trade it on the long side?
Perhaps it does, but just for this expiry, I think it was very clear yesterday, the weekly expiry calls lost 40 to 50% of the premium at a time when the Bank Nifty was up 100 points. It's a clear indicator that smart money is playing for a flat expiry. 27,600 call and 27,400 put. The combined premium is down 50% yesterday. So a move will happen only if 27,400 is breached or 27,600 is breached decisively. By decisively, I mean you need to trade above it for at least half an hour or 1 hour. Otherwise, perhaps 27,500 thereabout could remain the fulcrum. There are 2 or 3 important things with Bank Nifty today. I think the Kotak case that is important. Kotak is third biggest component. HDFC Bank has been a bit of a sleeping giant. Federal Bank numbers come. Federal Bank can move 8-10% on either side based on numbers. That has been the case. So let us see. But my base case is somewhere around 27,500 is the fulcrum. If the Bank Nifty starts to make a move above 27,600 or below 27,400, then perhaps you get a trade there.
Okay. Well, actually, there's a bit of question marks over whether the hope vested in the Bank Nifty and in banks in general will be realized this quarter. So Federal Bank will be, in a way, a move into it, a peep into how these banks will perform. IndusInd did come, but IndusInd is a category by itself. It's not reflective of other banks. IL&FS, a lot of those power companies. We don't know how each bank has provided for it, and all these have not been resolved. So while everyone realizes that we are at the tail end of the NPA risk, even the tail is turning out to be a fat tail, with unexpected things popping out like IL&FS and the power companies, even SR. One thought at least there is some resolution would have happened, and that's not happening. And now it looks like, Samadhan is, some 16 power projects, which is like about 40,000 crores. If it's not provided for, then again, that will show up in the various balance sheets. So maybe that's why there is a bit of doubts on Bank Nifty candidates as you head into the result season.
All right, well, on that note, let's kickstart the show and tell you what our wise experts are saying as we head into trade this Thursday morning. Mahesh Nandurkar of CLSA is our expert for the day. He says select public sector units offer attractive risk-reward. India stands out as the only emerging market trading above its historic average, but its state-owned enterprises are trading close to all-time lows at a forward PE of 8.8 times. CLSA believes valuations relative to the Nifty appear even more compelling at a 50% discount. Concerns of a rising fisc, cross-holdings and public sector units being called to do national duties are the key reasons for the D-rating. However, a lot of the bad news is now priced in, and select public sector units now offer favourable risk-reward, especially as there is a risk of slowing domestic flows, driving a market D-rating. ONGC, NTPC and Coal India are their top buy ideas among non-financial PSUs, and among financials, they prefer SBI.
Okay, now that's a bold call to say buy the PSUs. Let's see if it works. Now, here's another a very important opinion coming your way. Dan Feynman of Credit Suisse says they remain optimistic on the first half. Credit Suisse sees support from cheap valuations, undervalued currencies, light foreign positions, favorable trends in the dollar, China stimulus, and a bottoming of technology. Korea, Singapore and Taiwan are their favorite markets. In India, their biggest underweight.
Okay, well, let's get you some money market views. The rupee yesterday edged higher by, a tad bit actually, 71.24. Okay, that's where it closed yesterday. It's sort of been around that level. Mohan Chanath, Kotak Mahindra Bank says that the global currency markets are range-bound, with the dollar index trading between 95.50 to 96.50. The pound was volatile on Brexit developments. Rupee also largely flat with mixed cues. He sees the dollar INR trading range for the day at 71 to 71.40.
Uneventful day for currencies, you will have to say. Yesterday also, they fell a bit. So it's about 2-3 days of falling in a trot. Today may be flat. On bonds, Mohan Chenoy says uncertainty regarding fiscal targets is adversely impacting bonds. The old 10-year benchmarks expecting a trading range for the day is 7.54 to 7.59. Note that, almost 7.6. While the new benchmark bond is expected to range around 7.25. 7.29%. Yesterday there was a very sharp move in bond yields to 7.55, and that was largely because of one BJP spokesperson saying that we should indulge in fiscal expansion. Now, I don't know why the market had to believe one spokesman, but the bond market was in tatters yesterday.
Okay, and that also tells you that from now to May, the market will react to a lot of things. So so that is always going to be the case. But anyway, here's Mangalam with the world view.
Well, the Dow Jones climbed 141 points in yesterday's trading session, and that was earnings-led. So the ladder that it climbed on was Goldman Sachs. Goldman Sachs reported a blowout quarterly performance, and the stock took the 10-year challenge, the best day that the stock had in the last 10 years, 9.5% up on Goldman Sachs. On the back of that, we saw some financials gain as well. Morgan Stanley reports its numbers today, so the street will be watching out for Morgan Stanley's results. In the technology space, Snapchat or Snap Inc., both the app as well as the company's stock are on a downward spiral. So Snap fell about 13% in yesterday's trading session after the company's CFO resigned. Moving ahead in the European region, though, the indices are digesting cues coming in from Brexit. So the FTSE was the key underperformer out there. The DAX as well as the CAC doing fairly well. In the peripheral indices, the Italian index outperformed, and that's because Italian banks moved. There was a lawmaker suggesting a consolidation of weak banks in Italy. However, the Asian markets, keep an eye out on that. They're off the highs as we speak. The Nikkei, in fact, has corrected about 200 points from today's highs, but the SGX Nifty indicates a positive start. Keep an eye out on Brent, what happens as it moves higher, because it's 61 with the rupee around that 71 mark. So let's keep an eye out on that.
Okay, thank you very much for that, Mangalam.